Well, joining us now for a closer look at today's market action is Burgess from Nedbank Private Wealth. Hi, Kyle. Good to chat to you. What's happening at the moment when it comes to the overall market picture? All right, it looks like we might have lost Kyle. Well, if you have a look at what's going on at the moment, if you're having a look at the JSE and some of the boards there, like I said, we've seen Naspers doing pretty well at the moment, coming up a fraction, about a third at the moment. Well, let's go back to Kyle. Joining us is Burgess from Nedbank Private Wealth. Hi, Kyle. We're with you now. Take us through what you've seen so far today.
Hi there.
I mean, there's been some good ones. Let's start with Tharisa. We were talking about Tharisa a little bit earlier on. Softer production. What's going on there with the platinum producer?
Yeah, so I think, look, if you look at it, these are fairly, it's for a short period of time, so sort of quarterly report. So for a 3-month period, but again, I mean, if you look at the environment that they're operating in, quite sort of robust PGM prices. So that's helped them a little bit. But again, this is just a short trading update. They've provided some nice guidance for the next 12 months. And I think if you look at that share price, really performing very well over the last 6 months of last year, doubling almost or more than doubling in price, going from about 13.50 in late April last year to around 28 today. So yeah, I think they'll certainly need to put out better numbers than that to maintain that sort of momentum in the share price. But again, this is a business and in fact a sector that we haven't particularly looked at across our client portfolio. So not a business that we are sort of very close to at the moment.
Yeah, interesting. Like you say, it is early days. We'll see how the rest of the other quarters do go. Right, Primary Health Properties. They had a trading update. What have you seen?
Yeah, so again, some nice developments out of there. They completed the acquisition of Assurance. So that's created a significant healthcare REIT. And again, I mean, if you look at healthcare properties across Europe, but particularly in the UK where they operate, UK and Ireland, again, you are seeing some strong growth in that space. And that's, if you look at just from a dividend perspective, they've posted 30 years of consecutive dividends, which again, probably speaks to the demand in that sector. But again, in mid-2020 or in mid last year, we saw the NHS sort of do a review of their property, at least of where they'd like to take the NHS over the next 10 years. And they mentioned that they'd like to sort of relocate some services, to smaller communities. And I think that, again, will benefit healthcare properties, portfolio very nicely over that period of time. So some nice dividend growth, strong dividend yielding REIT. So if you are looking for income, I suppose, in a hard currency in the UK, that is certainly a business to look at. But yeah, a reasonable update in my view.
Right, something else that's making news is US President Donald Trump saying do not do business with Iran. If you do, you'll face 25% tariffs. We've seen in Simonstown that the Iranian Navy's pulled out of those actions. Reports say that Pretoria did place a phone call, worried about what the US is saying. It's, again, another move by Donald Trump.
Yeah, look, I think the man's had a very busy start to 2026. I suppose it's been in line with his whole presidency, the first and second term, in fact. But again, yeah, important to make sure that the friends that you keep are sort of keeping their I suppose, themselves in line. And again, we've seen a lot of commentary out of the US potentially weighing intervention in Iran at a military level. So, yeah, certainly something to keep a very close eye on. And again, we've seen those 25% tariffs coming in. If you look at Iran's economy, I suppose, if you take the geopolitics out of it, you need to look at sort of the flow of various different commodities that they produce, oil obviously being the most significant one. If you cast your mind back to sort of 2018, had significant exports of oil. I think, if memory serves, they reached about 2.8 million barrels a day. But that's come right down to sort of 300,000 barrels a day, and that's largely through to China. About 90% of that oil goes through to China, so would certainly affect them. But yeah, you've got to make sure that your friends are keeping themselves in line.
Yeah, but this has certainly helped the rand against the dollar. I mean, I was looking at it shortly, 16.40. We're keeping those levels, so Maybe the joke's on the US. Maybe this is not what Trump envisioned, or is it part of his longer plan?
Yeah, I don't know if there is necessarily a much longer plan, but I think if you look at how things have played out over the last 18 months, emerging markets, so South Africa and including China, have certainly benefited from a share price perspective on the back of that. That's playing out again, in the currency space. But again, quite a lot of talk of sort of the Sell America trade. But I suppose not just because of geopolitics. You are seeing a market that's fairly frothy from the sort of AI trade that's done really well, and obviously there's a lot of differing opinions on whether those valuations are justified. But if you look at emerging markets like South Africa or China or even Brazil, other LATAM countries, there's certainly a lot of value to be had. So that potentially, not going the way that the Trump administration would have liked it to have gone. But again, you've got to, I think, in an environment like this, really keep a strong focus on fundamentals.
Right, hold that thought. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching very closely.
Is more on the back end of that, and it's to do with what they've been doing for a very long time, which is called smart factories, where they use automation to make buildings work better. Now, with the addition of AI to their bouquet of services, they've just, for example, closed a deal with NVIDIA for which not only helps with the automation of a plant, but also using AI to make sure that your energy use is as efficient as possible. That's just on the factory space. They're doing the same thing with grids. Eskom not that Eskom, or they would go to Eskom and say, we're going to use AI together with our expertise in managing big electrical grids to make it more efficient.
So I wanted to talk about Netflix today. It's obviously been in the news a lot with the Warner Brothers offer still on the table. I see Paramount seems to be fighting quite aggressively to get their offer sort of back into consideration. I think it's a relevant one to keep an eye on because Netflix has earnings out next week. And if you take a look at some of the forecasts, the prediction for earnings per share is quite a decrease from a previous quarter. So we'll have to see where that comes out at. The Warner Brothers offer is definitely an overhang on Netflix's share price at the moment. You can see it if you look at the charts of sort of the one-year performance. I think a lot of that is to do with the regulatory barriers that have to be overcome, but also there's a sort of a north of $5 billion breakup fee that Netflix has agreed to there in terms of if that deal doesn't go ahead, it's going to cost Netflix pretty significantly.
Right, Kyle, there you go. There are two. Your thoughts on Siemens?
Yeah, so an interesting business. Again, it's not something that we hold for clients either in their discretionary portfolios or in our actively managed certificate, which is how we prefer to get our international exposure. But very interesting business, I think, lying at the sort of nexus of sort of industrial digitization, sort of across Europe or largely Europe. So a very interesting business to be in, diversified across various different segments. So certainly couldn't poke really many holes in it just from having a sort of a broad overview of it. But if you look at it from a valuation perspective, that share is trading at 28, 29 times earnings, probably justified just given sort of the various dynamics that are at play currently. But again, I think valuations are important, but a very interesting business. And, I quite like the stock pick.
Yeah, nice. All right, Netflix is an evergreen one right there.
No, yeah, very interesting business, Netflix. And, again, if you look at just their library or library of content, it's significant and really provides a nice moat for investors. But again, this comes at a significant cost. So from a capex perspective, they have been running at a loss for a long time. And again, it's not a sector that doesn't have any competition. They certainly have a lot of competition from the likes of Disney, etc. And I'm sure most viewers would have multiple different sort of viewing options when they sit down in the evening. So I mean, that just gives you an idea of the competition that they do face. But again, I think the pivot from going out and just spending money to create content towards more sort of free cash flow, being more profitable, I think is certainly good. And again, they've showed some, I think, pretty sharp step from a management perspective in terms of cracking down on things like password sharing, these smaller things that I suppose they are smaller things, but tend to drive revenue or erode revenue. So again, I like that business. It is very interesting, but we are seeing that business producing numbers, I think, this afternoon, if I'm not mistaken, quarterly numbers for the end of last year. So that will be interesting to see what that comes in at sort of 37, 38 times earnings. They're going to have to really print some pretty decent numbers to justify, that significant multiple. So certainly an interesting business to keep an eye on.
Yeah, right. Now your stock pick, what are you looking at?
So this is a business that I've mentioned on the show a couple of times, LVMH. It's I think if I look at the luxury goods sector, it's been a difficult space to be in over the last 18 months. I think there are various different players there that, and you need to have a sort of a nuanced view of what exposure you'd like to have. I think for me, the two most impressive players in that space, Hermes and LVMH, have looked attractive for some time. LVMH, particularly at the middle of last year, had staged quite a nice recovery from a share price perspective. And again, if you're looking for a recovery in China from a luxury goods perspective, potential growth from the US with the likes of Tiffany, etc., this is a business that is family-owned, well-run, with some significant cash on its balance sheet. So it's a business I like at the moment, and I think offers reasonable value. Certainly not what it was 6 months ago, but again, if you're looking at businesses that are staging some sort of a recovery, not always a bad idea to wait until they are 20-25% into it, which I think LVMH is at the moment.
Super idea. Kyle, thank you so much. Good to have you with us on Business Lunch. Thank you for taking the time. That was Kyle Burgess from Nedbank. That was Kyle Burgess from Nedbank Private Wealth.